Monday, April the 14th. How's it hanging? I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here is basically the same as it was last week, except I got some puts expire worthless in my favor, so otherwise it's the same. All right, let's jump on in. So the market closed in the green today. In the green. SPY's up around 0.9%. Q's up around 0.6%. We're down real small after the market is closed. And the IWM is up 1.2%. So not bad. Not bad to get some green on the books. It feels like green days don't happen much anymore, but they do. They're there. And today was okay. I talk sometimes about how I like a medium level of volatility. Like I don't like when the market doesn't move at all, but I don't like when we're moving 7% at a time. It's just a little bit too hectic. Today seemed a little more like a little bit relaxing, but we were still moving in a decent amount. We gapped up like 2%, pulled all the way back to kind of go negative or get to unchanged. We rallied back in the afternoon, almost back to highs, and then a little bit of a rollover into the close to give us a positive day with some decent movement in between. We weren't flatlined, but we weren't, pulling back 6%, rallying 9%, and then pulling back 5% like it seemed like we were doing every day last week, which was just, last week was some of the craziest price action ever. Really caught up on some rest this weekend, which was much, much needed. There was not a whole lot of sleep happening. Analyzing today's candle, though, it's not great. It's not the end of the world, but it's not necessarily great either. So what we said in the morning meeting today, we said a few things that was all pretty accurate. But on a closing basis, we really did not want to lose Friday's high. So we did manage to close above Friday's high, but we also closed decently off intraday highs. It's not a phenomenal looking candle. It's hard to really read this daily candle in the market. It seems like we're fairly neutral. We're stuck between an 80 EMA that's actually trying to turn up and a 21 EMA that is still declining. So we'll see how this market resolves here. Like I was saying in the morning, and then again later with Greta, I do think that there is a potential for a squeeze. It seems like positioning is in the favor of the market a little bit to support the market for maybe some higher prices. I know Bill a little bit earlier today posted the CTA numbers. CTAs are buyers in any tape this week, not necessarily massive buyers. I think it was like 7 billion SPX to buy in an up tape, maybe 5 billion to buy in a flat tape. But if they're buying $1 billion worth of stock a day, that provides some degree of support to this market. And also, they're not sellers anymore, right? For a while, especially in that first 10% down wave, they were massive, massive sellers. So you got a little bit of support coming in from the CTAs. And from a realized vol perspective, we closed up 0.8, 0.9%, which in a lot of markets could actually lead to some selling when we're trading a lot flatter. But in this market, that might even lead to some buying, or at least I don't think that they're available to sell anymore either. So, we have a little bit less, I think, forced selling from the market and into an up move because it's still also a low liquidity environment. I'm pretty sure pretty sure gamma is negative. In an up move, I still think you can see a squeeze. So 550 is hugely important for the SPYs. That's the first level to pay attention to. You got the 21 EMA that's trading at 545, spot 60 or so, but really 550 is that major, major level for the market. If we can get above that, especially if we can close above that at some point this week or whatever, I would expect that to actually lead to a bit of a positioning squeeze higher, where we could see 560 to 570. If we got into 560 to 570, and let's take it one step at a time, but at least with where my head's at right now, if we got into 560, 570, it's where I would really want to start leaning in more aggressively on the short side to then see if the growth slowdown part of this cycle really starts to hit in the numbers, especially as we're going into earnings season. But into the area where we're at currently, again, things are a little bit more neutral. It would not be surprising if we held the 21 EMA, held 550, pivoted down from here and started to work our way lower. It would not be surprising to me either if we got above today's high later this week, especially with some of the systematic support that I was just describing that squeezes us into that 560, 570 move. But broadly speaking, we have a little bit less of an edge here on the bigger picture, and we're kind of waiting for more information and seeing how it plays out. On the smaller picture, we called things really well today. We called for kind of like an opening cute day trade short because the gap up was so large. And what we're looking for on that, whenever we have these big gaps in the market, I always say let's see how the market handles the upside extension on the small time frame that results from that gap. So we had a really large gap up this morning, and guess what? It basically pulled right back into the 80 MA on the 5. It price corrected a little bit heavy compared to what a bull would ideally want to see, but we basically pulled back to the 80 MA on the 5. We created a pivot as that 80 MA caught up. We called out the long off that pivot low. Hughes did the exact same thing, touched the 80 MA perfectly. IWM overshot it a little bit, but again, we called out a trade short off the open. This is where you want to cover your short. This is where you want to flip long. And I thought that long could be a little bit more of like a intermediate time frame trade, or if that low could hold throughout the entirety of the day, it could make for a good day trade. And then if the market closes well, it could be for a decent swing trade. And we did get a good bounce off that low. So anyone that took that long there, you should have made some money in it, unless you were being super, super greedy. Then eventually that broke, and we went for a full gap fill. And it was kind of into that full gap fill that I know a few of us were getting a little bit more aggressive than again on the long side. You had this quick kind of flush tail here that happened when Donald Trump was speaking. But otherwise, you more or less held this kind of gap fill as some support. I remember I was buying Apple in there off a Rocks call. That trade worked out pretty well. And then we caught a decent roundup basically into the afternoon. So, bottom line is there was some decent trading opportunity today on the intraday if you pick your spots. And the bigger picture, there's not a ton of clarity on the bigger picture right now as we're trading kind of in the equilibrium zone. Like I was saying, a pivot high here would make sense technically for us to work down. But I actually feel like in the more shorter term or intermediate term on the daily chart that the risk is to the upside. I think that there's a little bit of positioning risk to the upside. But that gives way to the broader concerns that I continue to have over a growth slowdown. So on the one hand, you've got like the risk of a positioning squeeze, I think, to the upside. On the other hand, if that never actually occurs, it would be because fund managers are just kind of continuing to de-risk into up moves. And that's what we saw when we closed really well on Wednesday. On Thursday, we saw just like a de-risking from fund managers. And then again this morning, we had a really nice gap up, and they, there was a decent amount of selling that was there all day. So I think that there are still a lot of market participants who maybe have longs on who are using the up moves as an opportunity just to kind of de-risk on the long side. I know that's what I'm doing personally. The more up we go, the less net long I am right now. I am net long tonight, but I've got less than a good bit less than half of the long exposure that I had on now that I have on now compared to like when the market was trading closer to below 500 last week. I might have a third of the long exposure that I had at that point. Recognizing that we can squeeze higher, and I want to take advantage of that if that happens, but not being stupid either, because we've had a really big move. I guess that goes back to last week's theme of be greedy, don't be stupid, and that's pretty decent. So, that's pretty much all that I've got. I mainly spent my day, because we're in this equilibrium area, managing my swings. I took a few day trades to the long side in Apple. One was like off of this low for this little bounce, and then one was when Rock called it out at like, I don't know, off this low or whatever, caught this bounce, got out into this uptick. So did that. But the market a little bit as well when it was kind of getting into these lows, which worked okay also. And I guess that's really it. I don't really have too much else to talk about that hasn't already been said between the morning meeting and between what I was saying earlier with Greta. I don't really have anything new to say on the macro with tariffs and things like that. That we kind of all understand where we're at. The technicals aren't giving us a ton of clarity yet, but we will continue to monitor them and see how it evolves. So I am happy to answer any questions that anybody may have as I see this market down ticking here a little bit after hours. Anybody have anything? From Tate, is the bottom in short term? I'm gonna say yes, short term. Bigger picture, I'm very uncertain. Bigger picture, unless we get some real movement forward on the tariff front, like basically they go away. I kind of think that bigger picture, we will eventually see a new low on this market. But so many moving parts. Take it one step at a time. But at least in the short run, I don't see us getting back below SPY 480 anytime this week. So we'll see how it plays out. From Dave, no question, but I think lower low in VIX today as telling. Yep. So the VIX got below Wednesday's low, even though the market has not gotten above Wednesday's high. From Liam, what percentages do you allocate to swing trades versus your day trades? Would you recommend a newer trader to focus on one or the other, or is implementing both viable? I have significantly more risk on my swing trades, but just keep in mind the way that I trade is I've got these swing trades on that I very actively day trade around the core swing position, right? Like on my other screen here, I have TQQQ up, so I'll just pull this chart over as an example. Like I'm swinging TQQQ short, but look how aggressively, based on my buy and sell dots, I actually traded it throughout the day. So I put significantly more risk, honestly, on my swing trades than I do on my day trades. A lot of times, I don't really take things as pure day trades too much anymore. If I do, it's meant to be like a smaller risk, be set up where I think I can just make a few dollars for myself and get out of the way, like I did with Apple a couple times. But that's me personally. What do I recommend for newer traders to focus on? So the longer that I've been in the business, the more that I have felt that we are continuing to sell down here. The more that I have felt that pure day trading is reward limiting. So I like the idea for newer traders to basically kind of do it, I guess, like a combination approach where you're making your decisions that are based on the daily chart, right? Your decisions come from the daily chart. Your execution comes from the small picture. So in other words, you as a new trader, I would say, should only be taking trades that are in the direction of your expectation on the daily chart. And then on the small picture, that's how you actually execute the thought process. So the small picture is where you find the trade setup, how you put the stop loss in, and how you begin to manage reward. Then, if you put on a day trade on a 5-minute or a 15-minute chart that's in the direction of the daily chart, and it closes really well, then I would say keep a percentage of that overnight. Keep 10, 15, keep 25% of that position overnight. And because you bought it originally based on the direction of the daily chart, you could potentially open yourself up to a lot more reward if the daily chart continues to move in the direction of your original trade for the risk that you put on. But if the whole market moves against you or the stock gap's against you or whatever it is, you're primarily just, and you get stopped out, you're primarily just giving back some open profit. So ideally, unless you got really screwed over with some bad news overnight, ideally you are just giving back money that you've already made to potentially make more. So that's what I really like doing. I do not think that new traders should ever swing positions that are against them. So if you bought a trade today and the position is against you at the close, I don't think that you should really ever swing that position. You're swinging it from a lose-lose. Because if it gaps against you, then you're setting yourself up for a real loss. If it gaps for you, you're just making your money back. So I like to, conceptually be considering that I'm putting myself in the position to risk money that I've already made in order to make more, not to risk more money just to make money back, if that makes sense. For Michael, I'm trying to spot to get into PayPal. Any personal thoughts? I like PayPal a lot. I would look up when the earnings report's going to be, because I should have done that by now, and I haven't. So just make sure you're aware of, whenever that earnings report is scheduled to hit. I don't like. So if you asked me that this morning, I would have said you could have tried to buy versus Friday's high. If you took that, you would have gotten stopped out. And I don't like that it closed, it looks like, below Friday's high when the indexes didn't. So maybe that's a little bit of relative weakness there that says, hey, I'm going to keep PayPal on my radar, but I'm not in a rush to get into it until I get a better signal. Otherwise, if you're buying it here, you kind of have to give it to at least Friday, if not Thursday's low. So, yeah, it's been a lot of names have gotten slaughtered since their earnings reports last season. So hope that helps, Michael. From Alfred, where do you like a new Tesla? Where do you like a new Tesla short sale position now? So I'm already short Tesla. A lot of this is dependent on the market. So that's why I'm like super focused on the market right now before I really break it down in any individual stocks. We were just talking about with the market how it's a little bit uncertain here, because we could see a positioning squeeze higher, or we could see a pivot high come in here and just de-risking. Tesla I do like as a short. I think that it's been acting really relatively weak. It's not trading well. And if you think that the market basically just created a pivot high today, you could be short Tesla versus like 260 area, or the high from today / the high from Thursday of last week, which is like 262, 263. That's if you think that the market is done after today. If you think that the market has a chance of giving that real squeeze to 560, 570, Tesla probably outperforms in that, just because it's higher beta, right? So in that case, you could easily be seeing Tesla retest 280 to 300 before the real short sale actually comes in. So I guess you could try, so since we don't know what the market's going to do, of those kind of scenarios I just presented, you could try some Tesla here versus that like 262 area, but get yourself stopped out if it goes through it, and then you can look to reestablish that trade if the whole market's breaking out when you get more of a market signal and when Tesla's trading at a higher price. And then it will probably be a much better short in that $280 to $300 area. Palantir, on the other hand, it's interesting to see that Palantir's kind of close at lows, because I think that this is actually one of the better looking daily charts of growth stocks out there right now. There is a lot of relative strength here in these last few days. So I am short Palantir. I mean, look, Palantir's just been a go-to short for me for months now. I would not be short Palantir if I didn't have all this long exposure on. So I'm doing it as I'm helping me manage kind of my long risk, and I know the stock so well. Again, here's my Palantir executions to share them really quick. I know that, like, all right, Palantir might go against me, but I know the name so well, and I'm trading it so aggressively intraday here that I feel like the money that I'm able to make, even as it's relatively strong, is going to benefit me in a way where if the whole, I could easily see this Palantir trading back into the low 100s, trading even at 105 or 107 if the market squeezes higher, and I'm fine with that, because I feel like I'll be able to make enough in the shorter time frames while I trade it, combined with the fact that if that's happening, it means all my longs are going up, and I'm going to be just fine. But otherwise, if I'm looking at Palantir's daily chart, I don't. This is not my favorite short that's out there right now, and I probably would be a little bit patient on it. And I actually called it out as a potential long this morning, but by the time the market opened and this thing was at 95 plus, it was too late. From Richard, GLD put and call price are both going down today due to lower expected volatility, I guess. How do you feel about gold going forward? It's good information. I don't have strong conviction on gold. Gold is a very technical instrument. It really, when momentum comes in, it tends to continue. It seems like how gold trades going forward is going to depend a little bit on the equity market. Like, they're trading a little bit opposite of one another. So as fear comes out of the equity market, which probably means that those stocks go higher, like the indexes go higher, then gold probably has some money come out of it. The flip side is if we see more fear come back into markets for whatever reason, then gold could give a whole nother leg higher. So I don't have a strong feel for it. It's not really something I trade, though it's certainly something I'm monitoring in this current environment because it's important with how it's been moving recently. So I appreciate the question. From Richard, also if we open flat tomorrow or gap up small, is it stupid to put on new long positions? It's not necessarily stupid. You just got to know where you're giving it to. How are you managing risk on that in case you're wrong? So I don't love flat opens generally. I love opens like we had this morning. Big gaps I always find give me an execution advantage. And I find that I am able to kind of predict the market movement, generally speaking, much better when we have gaps, especially the larger the gap is, than if we have a flat open. I don't like flat opens. If we have a flat open tomorrow, we would have a flat open with no gap with a market that's trading in between the 8 and 21 EMA on the daily chart. That's hard for me to have much conviction. I probably would say it's a less is more type of day. But it might not be a bad risk reward to put longs on in a flat open versus like today's low. But if you're doing that, you're looking for that situation I discussed of a 550 breakout, really. Otherwise, I don't think it's worth it. Or at least a test of 550 versus today's low. Otherwise, I just don't think it's really worth it from a risk-reward perspective. So you have to have that sort of reward profile in mind. Yeah, take some profit off to cover risk, but really 550 is target one, and then a squeeze beyond 550 would be what you're really looking for from that trade to pay you. So I don't hate it, but it's a little tricky. Yep. From Pete, I remember from a while back that you did not use stops that much. Wasn't sure if I heard correctly, or do you normally have a mental stop and access when stock is close to that level? Yeah, that's correct. And assess when the stock gets close to that level. That's correct. I don't really trade with stops. It's not what I recommend for other people. I recommend that traders trade with stops, but I've been talking about this for the last couple years with for a long time in afternoon meetings, I would basically more tell people what I think the right thing is to do and less tell people what I actually do. And then in the last couple of years, I've been a little bit more forthcoming based on trader feedback on trying to balance what I think the right thing is to do versus what I actually do myself. For myself, I don't really trade with stops. I do once in a while. I do here and there, more for like day trades really than anything else. But otherwise, correct. I don't really trade with stops. I don't even trade with a mental stop most of the time, to be honest. I started to assuming that I get invited back to speak at either the Velocity event, which is called Market Minds, or at Traders for a Cause this year. I've already started to think about what I want to talk about potentially if I get invited back, or next time I'm doing a bigger public speaking engagement. And I think what I want to talk about is how all like much of the traditional trading wisdom that's out there, I have found success in not following. There's a lot of different like rules out there, like, for lack of a better term, I actually hate this term, like rules of thumb, that traders always talk about, that I've actually had a lot of success in not following. and that includes my use of stops or lack thereof. But it's because I'm not trading on stops. I'm trading on math, right? I'm trading on. I'm willing to risk X amount of dollars in a trade, but I don't know, like, I don't know. I know I used AMD as an example in the past. Like I've been long AMD from like $120. I don't even know what my P&L is. P&L is in the stock right now since I've been long the name. It definitely was negative when it was in the 80s or 70s, but whatever I'm thinking I'm risking in my head when I first put the trade on, call it $10,000. That might mean that I'm down $10,000 when it's at, I don't know, $110, but it's not including all the money that I made in the meantime. So a lot of times where I'm putting a trade on for the first time, and I'm saying, all right, at this price I'd be down $10,000, and that's how much I'm willing to risk in it. By the time it gets to that price, I might not be down in it at all. I might not be down in it at all. I might even be positive in it, depending on how it got there and how I traded it in the meantime. In which case I go, all right, well now it's at 110, and I said I was going to give it $10,000 in space, and now that means I can hold it to 104, and then sometimes 104 becomes 95, and I'm just constantly kind of just assessing where the position is, what the math is for me on that position, and managing it. So that's what I do. I don't really trade with stops, but most people need to. A lot of people, they're not trading with stops, they're going to blow up their account. So, especially if you're like a pure day trader and you're using a lot of leverage on a day trade, if you don't have a stop in, you can do a lot of damage to yourself. So, hope that helps. What are these headlines that are coming out here? No evidence from Scott Bessent. No evidence of sovereign sales of U.S. Treasuries. Eyeing sometime in fall for discussing the next Fed chair. We could run up buybacks if we wanted. Like stock buybacks. Like I don't even understand what that headline means. We could run up buybacks if we wanted. Or is he talking about treasuries? Not sure. Netflix aims to double revenue by 2030, per the Wall Street Journal. Dennis, I think a very big chunk of your edge is in your management. I think so too. From Richard, I'm still having trouble with stops. If I put on automatic trailing stops, I do not like automatic trailing stops. I do not like automatic. That I can say with certainty. I do not like. I like stops for risk management when you're first entering the position to get stopped out when you're wrong. I like using a risk-reward stop sometimes, which basically means you're getting very close to your offer. If you get 2 cents away from your offer, it's not worth giving it back $2 to make that 2 cents, so use a risk-reward stop. And I am a big believer in trailing stops, but not automatic trailing stops. I do not like stops that just like trail it by 1% or trail it by $1 or trail it by 25 cents. That's random. I want the market to always tell me where my stop loss should be. So that includes when I'm first entering a trade. If you are putting a trade on, the definition of a trade is something that has a reason for entry and something that has a reason for where your stop loss should be. How you're managing risk if you're wrong. If it doesn't have both sides of that, it's not a trade. So any trade that you're executing, needs to have the stop loss that is based on something. Not I hate just like, oh, I'm gonna buy the stock and give it 1%, because it's just very random. And then same thing with trailing stops. So in my one class I have in my training program, I think it's like the reward maximization class. I go over my 3 rules for trailing stops: pivot, ADMA catch up, and new high. There it is, right there from TT. So I want, and I'm pretty sure I went over this in a fairly recent afternoon meeting. I'm not going to just trail based on a random percentage amount or a random dollar amount or anything like that. I am trailing based on my rules being satisfied that enable me to raise my stop to a price that the market tells me is important. That's what I'm looking to do. And I didn't read the rest of your sentence. If I move stops manually, like we discussed, ADMA catching up, higher lows, etc., I don't really have the freedom to monitor the market from 9:30 to 4. Do you have any thoughts or advice on that? Yeah, that's hard. I don't have any thoughts or advice on not being able to properly manage positions throughout the day. My advice is to try to properly manage the position. Otherwise, what I would do personally is I would just leave in that last stop until whenever I'm able to look at it again. So, if I'm either leaving in my original stop or I'm leaving in my last trailing stop as I go about my other business, and then 3 hours later I'll see if I got stopped out or if there's new evidence that enables me to raise that stop. So I would just do it as much as I can. And I tend to be in front of the computer like pretty much all day every day, but I'm not necessarily always in front of the computer all day every day. I have times where I have to, I don't know, step out and drive to the post office or whatever, and then I just kind of come back and I just continue with my game plan based on where the market is as soon as I sit back down. From Pete, another question. I think you said you don't generally leg into a position, but instead pick your spot and size and stick with that. Depends on the type of trade that I'm taking. I do both. If I'm taking like a more of like a pure traditional day trade where I know exactly where my stop loss is going to be, then I'm usually taking all my size all at once. But a lot of other times, if I'm buying at 120, it's going to be a swing trade, and I'm planning on giving it at least initially to 110. Then yeah, no, I've got a game plan that's going to have me build into that position on the way down as it goes from 120 to 110, and then book profit on the way up and kind of work it back and forth. From Tate, stopping because you're in the red and stopping because you're actually wrong are two different things. Yep, I can agree with that statement. They say not to trade your P&L. I do it all the time, but they say not to. Anything else? Not seeing any questions or commentary on the YouTube for today. Maybe everybody got sick of me. Anybody out there on the YouTube? Say hello. Don't be afraid to say hello. Yeah, there's a few people, Richard. I would say, yeah, for sure. It was a boring 0.64% day for sure. Richard, I don't know. If I had to estimate, I would say that like 90% of the traders on our team are doing this full time, and 10% or probably a little bit less are balancing other careers and jobs at the same time, which I know can be tricky. What's up, Robert? What's up, AR? What's up, Formula One? From Sam Musin in the YouTube. What does your typical morning routine look like? A typical morning routine. So I usually set an alarm for around 4 a.m. Mountain Time, which is like 6 a.m. Eastern. It fairly rarely goes off. So I'm usually up just kind of naturally before that. Anywhere between, I don't know, 2 something and 3:30 is probably when I'm usually actually getting up. First thing I do when I get up is I go and I press the coffee machine button. I make the coffee the night before, and I press the button. And then while it's brewing, I come upstairs where I turned one of the bedrooms in this house to my office, and I turn the computer on, I turn the heat up. It's still pretty cold in here, out here in Idaho in mid-April. So I turn the heat up, and I turn the computer on kind of at the same time, and I log in and I see what my P&L is. I say good morning to everybody in the VTF, and I will look at very quickly each one of my open positions to see where it's trading versus where my game plan says I'm supposed to do my next buy or sell. And if it's trading above or below where I'm supposed to buy or sell some stock, I pretty much do it immediately. So I have a quick kind of go through on all my swings, and I'm usually in, I'll be in 28 swing positions tonight. takes a little bit of time. I'm kind of tired. I'm doing it with one eye open, and then my coffee's usually done brewing by then. So I shoot down and I pour myself a cup of coffee, enjoy those first couple sips, and then I come back upstairs, and then I will begin to layer out all of the bids and offers at that point for all of my game plans for all of my stocks. Usually I'm doing that with a podcast on or with some music on because it takes me 30 minutes, 45 minutes to put in all those orders every morning. And I, try to be relaxed with it and take my time with it and, listen to my podcast or listen to some music. So that might take, again, 45 minutes. I'm keeping an eye on the VTF. I'm keeping an eye on any headline news that's coming out at the same time. Then I'll probably go down and get another cup of coffee and then come back upstairs again. And then I start to really dive into kind of my research. More starting with individual stock research or any major macro research. Kind of going through the names. I got upgraded, downgraded, whatever. By that point, hopefully Pat's awake and starting to put in additional information into VTF. Pat waking up is usually my cue to go get breakfast. So go downstairs, get some breakfast, bowl of cereal with a bunch of blueberries on it, something like that. Big fan of blueberries. They're super, super good for your brain. So I try to have some blueberries pretty much every day, every morning. And then I come back upstairs and I dive deeper into my research, a lot of the macro research at that point. I'm building out my watch list of trade ideas for the day that I eventually post in the VTF around 9 a.m. Then I go back downstairs, take my vitamins. Big believer in vitamins. Take a multivitamin, I take fish oil, I take vitamin D, I take magnesium, I take a probiotic. What else is in there? Whatever, couple others. Yeah, Josh is still asleep. Well, Josh might have gotten up briefly at like 4:15 Eastern, like put a trade on and then went back to sleep. Then I come back up, and about then is usually when Pat is publishing his morning note. So I read the morning note, get some information from that. It helps me form my thesis for my expectations for the market for that day. And then it's 9 a.m. and I, get going with the morning meeting and I kind of present everything. So that's my morning routine. Robert wants to know if I take cold showers. So I typically shower in the evenings, not in the mornings, because my mornings are too busy. I am a supporter of the cold shower idea. When I'm in New York City, I have a different morning routine. When I'm in New York City and I go to the office and it's also summer, then I will sometimes take a really cold morning shower. I know that they're super good for you. I don't though. at least not regularly, and especially not in the winter, where it's sometimes negative 35 degrees here or whatever. Anyway, so yeah, once in a while, but not usually. When do I go to sleep? So this time of the year gets tricky. I hate this time of the year for when daylight savings has the days go longer, because it makes it hard for me to go to bed as early as I do. And I know that Trump is talking about trying to make it permanently this time. I'd be very, very upset if that happened. I'd be very, very upset. I want early morning sun, and I want that sun going away. It gets really tough for me here. I think it's also my positioning within the country and within the state. I'm going to bed now almost every day with the sun still up, and that sucks. And in the heart of winter, it's dark all the time. It doesn't matter. But I hate going to bed when the sun's up. It sucks. So I end up sleeping a little bit less and sleeping in a little bit more when we get to this time of the year, and I'm still out here in Idaho just because of the cycle of the sun. Though I actually just put some new blinds up, some real blackout blinds in my bedroom here, to make it easier for me to go to bed when the sun is still up. But yeah, I don't like it. I like I like the sunsets. I get gorgeous sunsets here, and I like the idea of staying up and watching them, but I usually don't. So in the heart of winter, I go to bed at 7:30 local. Um, and then this time of the year, I end up going to bed more like 8:30, and the sun's still up. And again, that just sucks. So again, I'm a little bit later to bed and a little bit later to rise this time of the year, but I do my best. And I think what ends up happening, especially on a week like last week, where I'm getting up at 2:15 local on a lot of days. I'm the type of person who really needs that, like, at least 7 hours of sleep, more ideally 8 hours. I don't. My brain does not function as well. Um, when I don't get 8 hours of sleep. And I think that sleep is super important. I mean, that's what all the science says. So, like a week like last week is just brutal because I'm getting up at 2:15, 2:30, but I'm trying to go to bed at 8, but the sun's still out, so it's tough. And then I'm just not getting enough sleep last week. I was just exhausted. Uh, but yeah, I try to be pretty disciplined with that stuff because sleep and nutrition and things like that. I mean, I can tell. I can tell when my brain's not functioning and firing at all cylinders, and it makes it we're in a performance based activity, and I'm also a retired professional athlete, so I had to always be very disciplined with water intake and food and sleep and things like that. It's like very instilled in me because that's what is necessary to be a high functioning, high performance athlete. And if you're trying to be a professional trader, I got news for you. You're a high functioning, high performance athlete, at least mentally. And ideally, you're exercising also because getting in the exercise also is going to give positive benefits on how restful your sleep is and honestly how well your brain works during the day. So I try to be very cognizant of the things that are going to maximize my performance. A bunch of them I just mentioned. Eating properly, get those blueberries, take the vitamins, go to sleep on time, get 7-8 hours of sleep, and and get exercise. So very important. Uh, from Richard, sometimes I find day job and trading get in each other's way. Yeah, it can be frustrating. There's other people in the VTF having the same problem. Maybe we can share some thoughts and tips on how we manage. Yeah, so if anybody is trying to manage a job and do this at the same time, reach out to Richard over in the VTF. If you're a big fan of vitamins, I would recommend to take genetic methylation test. Sure, yeah, shoot me some information. I'll never heard of it, but I'm down to learn. Market was a little slower and boring today. It was. Yeah, Alibaba. I still have some Alibaba on. L-tyrosine for mental cognition. Yeah, that's an amino acid. I'm not super familiar with it. Yeah, there's a lot of science starting to come out on creatine that supposedly has a lot of mental benefits. I still just remember I just have bad connotations mentally towards creatine from when I was young. It was always viewed as like, oh, what are you juicing? What are you on the juice, man? You're taking creatine. And then it was also because like I remember all my friends in high school, but this is probably more a reflection on them than a reflection on creatine. They started doing a ton of creatine and going to lift weights at the gym, and they would put on some muscle, and then they would stop, and they all got super fat. And I was just like, well, it seems to me like this creatine stuff just like juiced them up, made them put on some weight, and then when they stopped exercising the same way, they just became fat. So that was always in my brain because that's what I had seen, but I don't think that the science actually supports that. It was more just what I had seen. But now it seems like there's a lot of new science is coming out on creatine benefits, but I haven't done too much research myself. From Jackie, are you still in the same sleep schedule on the weekends. If you have a longer night on the weekend, how do you reset for the week? Sure, that's tough. So that's a tough one. I try to be roughly on the same sleep schedule on the weekend. Roughly. Maybe if I don't have anything going on, if I'm not out, then again, this is mountain time. Then I'm trying to go to bed by 8:30, honestly, on weekends, which is 10:30 Eastern, and then getting up maybe a half hour later or an hour later or something like that on the weekend. But I do have a social life, and I think that life is about balance. So I am not going to be so disciplined with my sleep and everything that I'm not going to also uh, go out and enjoy my social life. Like, um, every once in a while on a weekend, I might be out till 1 o'clock in the morning or something because uh, something's going on and I was out enjoying myself. Or, I mean, alcohol is another one, right? Like, alcohol is so bad for you. It's like drinking alcohol, even a little bit, they're showing now, even like a little, like, I remember when I was young, they used to say, like, oh, a glass of wine every few days is not the end of the world or whatever. Now everything that we know just points towards alcohol just being like absolutely atrocious for you. It's bad for your brain. It lowers your life expectancy. Even doing it in small dosages, like having more than like a drink a month is super bad for you. But I like alcohol. I like the social lubricant when I'm out. I like having a few drinks. So again, it's it's balance, and I'm gonna enjoy the weekend, and I'm gonna enjoy some drinks. Um, Nootropics for the trading desk. Okay. um, yeah, I agree with you, Dennis. So I worked in Spain for an entire month in 2022 and I loved it, but that's because of the market. When the market closed. So look, I live off more or less Eastern time, so that's ideal actually. I think Spain is an awesome place to work for a trader because the market closes at what 11 o'clock. No, 9 o'clock, right? Mark closes at no, maybe 10 o'clock. Mark closes at 10 o'clock, but by the time I'm done with the afternoon meeting, it was like 11 p.m. And I would get reservations at the top restaurants in Barcelona, 11:30 midnight reservation, and I would go eat dinner at 11:30 12, and then I would go out after that and and stay on Eastern time. So I actually thought that Spain was incredible to work out of from a trader. Barcelona was great. London is terrible. Paris is somewhere in the middle. London sucks. So, sorry, Robert. um, like everything closes so damn early in London. It's like, come on, you guys. We try to pretend like London's one of the greatest cities in the world. Like people say, New York, London, Tokyo, and I'm like, nah, I'm not about it when it comes to London. Everything just closes so early there that even though the market closes a little bit earlier there because of the time zone compared to most of mainland Europe, everything's closed. Trying to find like a decent restaurant after the market closes out there is terrible. And yeah, even the bars are closed up by like 8, 9, 10 o'clock. So I don't know. I actually found London as one of my least favorite places to trade from, and Paris was somewhere in the middle. The time zone's a little is an extra hour from London, but they're a little bit of a later city, but they're not as late of a city as most of Spain is. So anyway, uh, just my personal opinion. Not a real hater on London. I studied abroad there once upon a time when I was in college, so I do have some warm fuzzies for London. But I just think from a trader perspective, it's tough. And then yeah, New York City. New York City is not. I mean, New York City is that city where you can get anything that you want at any time of the day, 24/7. It's the best. Okay, thanks, Joanna. It's good to know. Some people have genetic variations that make it difficult for them to absorb standard vitamins. I do think a quality vitamin is important. And there's a lot of vitamins that just pass right through you. So you want to do your research on making sure that what you have is quality. And I guess it's worth it to maybe do some genetic testing to have some general understanding of things. I mean, I did. I know that they're bankrupt now, and my information's probably got sold out. But I had done a 23andMe at a certain point, specifically because my grandfather died of Parkinson's disease, and it was just really, really bad watching him kind of succumb to that disease over the course of a decade or so. And I really just wanted to see if I had any genetic variations that would make me more susceptible to that. Because I figured the earlier I could find out that I might be susceptible to this, the earlier I can begin to try to do things that can help, make the onset not occur. And then I was lucky to see that, at least out of any of the genetic variables that they tested, I don't really have a predisposition to Parkinson's. So either he somehow scooped that up environmentally, or I just didn't get passed through that gene, which is good. From Liam, super broad question, but how should a new trader go about finding their own strategy while working with smaller capital? Almost done with the trainings, going to have to do a lot of thinking, and I want a paper trade for at least a week before going live. It's a process. It's a real process trying to develop your specific edge to the market, and what works with your personality is a big part of it. Like, this is what I spoke about last year when I spoke for Traders for a Cause. Is just that over the years that I've been in this business, I have seen so many people be successful, but also fail with so many different types of strategies. And why is it that one trader can be super successful with a strategy and another trader could be trading almost the exact same strategy and fail? A lot of that just comes down to discipline and being able to follow through with game plans and risk management and all that. But I think that as people, we are all going to be more predisposed to being able to be more disciplined with certain strategies than others. Like, for example, like a high frequency scalping strategy versus like a little bit of a bigger picture strategy. I have found that for my personality, even though I trade a lot and I trade very rapidly, I'm not great at super hyper scalping strategies. Where I'm taking a lot of size with tight stop losses and doing it on repeat over and over and over and over again. It doesn't suit me well. So I think that for newer trader, like a great starting point is the training program classes, because that gives you a foundation, gives you a few different trades that you can start to work on, and then you work on those trades and you keep statistics, and then you make small adjustments over time, and you learn yourself over time, and you learn from other resources as well, and you start with, I don't know, a simple breakout trade, or you start with the hammer capitulation buy setup kind of trade, and then you learn something from someone in the VTF about a different layer of probability, and it makes you make a small adjustment to your strategy. But the key, I think, is small adjustments over time. A mistake is to go from one big strategy to the next. Today you're a tape reader, hyper scalper. Tomorrow you're a swing trader only. The day after that you're a stat arb trader. The day after that you're a macro trader. The day after that you're an investor. You become a jack of all trades, a master of none, and you will be successful at none of them. So you want to figure out, over time what works for you with small, consistent adjustments. So I hope that helps. All right, see you, Dennis. They poke people in London. I don't know what that means. Do you recommend a new trader stick to one name at a time? You gotta figure out what you can handle. When I was a new trader, I created a rule for myself that I would not allow myself to be in more than 3 stocks at a time. Once I was in more than 3 stocks at a time, I felt I wasn't managing my game plans properly, and I started making mistakes. So not necessarily one, but for me, it was a rule that I created for 3, and then as I got more experience, I was able to increase that over time. Billy says NYC has seen better days. Yeah, maybe, but I think that NYC is awesome. New York City's great. And I don't know last time you were in New York City or even where you live, but I think New York City is still an incredible city. It's a phenomenal place to be. It's a phenomenal place to live, especially for younger people who are in their 20s. I think there has always been some degree of crime in New York City, but I think that what the media portrays, not that I watch the media, is not what it's like. People in Idaho that I make friends with out here, especially like the real local people, like my farmer neighbor and his kids and stuff like that, they're all like, "Oh, New York City, it's got to be so dangerous." It's not so dangerous. Anywhere is dangerous. You just got to be aware of your surroundings. And then people in New York City think I'm crazy for being out here. They think I'm gonna get like bit by a cow. Which I did have my neighbor's cows in the middle of the trading day today. I got into my property and I had to go out and chase them back into his. Part of the fence is broken. And this one cow would not back down. I'll tell you, I was more scared facing down that cow than I've been in New York City in quite some time. But you got to be aware of your surroundings. If you're in any big city in the world, there's a lot of people. There's always some crazy ones, and you just got to be aware of your surroundings. But if you like food, culture, music, New York City is the place. That's the one thing I always really look forward to for getting back to the city is the food. There's great food here, to be honest, where I'm at, especially if you like meat. But the diversity of food and concerts. Love live music. Love going to concerts. You're not gonna see the Rolling Stones play in Victor, Idaho. No, I've never gone cow tipping. Yeah, for sure, Tate. But you gotta be aware. You gotta be aware of your surroundings. It's really important. All right. Well, this afternoon meeting turned into just a hangout sesh. It seems like, which is fine and fun. So yeah, I'll probably wrap it up there. It's 10 after 5. It was a decent trading day today. A little bit slower, but we still had a little bit of volatility and some opportunity. So have a great night, everybody, and I will see you all tomorrow.